Welcome back, everyone. So you may have noticed in the past few weeks, I have done a few less sorted topic videos during the week. This is because I've been spending a lot of time looking at, breaking down, and thinking about a few topics, research into predominantly uranium. Now, there's a lot that I've uh, found and looked at and considered and all. And I hope to be I may be I'm trying to figure out how I'm going to talk about a few of those things in some videos, but that's something that I'll hopefully get to. But today's video is going to be about what Cameco might or can or will do once the contracting begins and starts up again for MacArthur River. Okay, so I wanted to start with the bearish narrative for uranium, Cameco, MacArthur, whatever. And I'm going to ignore the bear narrative of it never starts up again because, I mean, you can say that, but I haven't heard too many people say it, and I disagree with it entirely. So the bear narrative that I'm going to use is that once uranium gets to $45 a pound, Cameco will contract for MacArthur River, and then they will take 9 months to ramp up, producing 4 million pounds in the year that they decide to ramp up, and the next year will be 18 million. Don't hate me, I'll get to it. Now, I have a few problems with this, but first off, I want to start with contracting is not going to be done overnight, and I don't know how long it will take. Some bulls seem to think it'll take longer than I think it might if the price were to be moving up. But on that same note, if the price is moving up, are we really thinking that it would stop at 45 completely while MacArthur River is contracted before moving off, before moving potentially higher to get to the next contract? I mean, I suppose that's possible, and it would make some sense that it would stop because MacArthur would be contracted, but at the same time, I don't know about that because the prices just proved that it was moving and that there's not enough in the prior region. So maybe those who haven't contracted might begin to start looking at it, being like they might need to soon. And MacArthur is only one mine. Now, the problem that a lot of you potential uranium bulls, I assume there's might be some of you watching this video, the problem that you might have is that I said 9 months and that it would produce 4 million pounds in the first year. And I know, even here, this is a minimum, and I know that it will probably take longer than that because I know how things move. That being said, I didn't pull up 9 months out of nowhere. I used it from Cameco's website, where they said it will take a minimum of 9 months to do the maintenance, readiness checks, training, recruitment of employees. You can see on this slide, this is copy and paste from their website. Now, they do say minimum, and I do believe it would probably take longer. And this is from the time of their decision to restart, which has granted not been reached yet, so there's still time. Before that, and they would probably want to contract first, and so either way, there will be a long lead time and we'll see it coming in advance. It won't be the shock that ends the cycle, I don't think. So there we are for a few thoughts on the bear case. Now, I also have a lot of questions about the bullish narrative. And the bull case is that Cameco will wait to $60 to $70 uranium and then contract Cigar Lake first. And then once they decide to restart MacArthur, it will take 18 months to restart MacArthur. Then the first year will produce 4 million pounds. And this is not what I think will happen, but I will get into that. Okay, so I want to start with saying maybe they contract Cigar Lake first. Maybe it takes more than 9 months to uh, ramp up MacArthur River. But I don't know exactly how long the market can survive without MacArthur River. But if you think that once the price hits MacArthur River, incentive to restart back up, that's already well above the $20 range that we're in, meaning the price has already disproven all the, not all, but many forecasts that say it's going to be in the 20s for a long time. And the market has already figured out, okay, there's a problem with that thesis. We need more uranium and we're willing to pay up for it. So once that happens, for it to then be slow motion movement on MacArthur River, I don't know about that. And then if we think that once it hits $55 and then you take, I don't know, 3 months to contract, I'm sure some bulls may tell you that it will take much more. It may well. And then you have 18 months to start the ramp up for MacArthur. And then the next 12 months, you only produce 4 million pounds. And some might say will take longer than this. Well, that's already close to a few years, almost 4 years until we get back to 18 million pounds. I can't factor, at this point, I can't factor anywhere near that much bullishness in what I'm assuming would happen, because that feels to me like it would be betting on slower motion at a time of the market wanting to move quicker than what optimism would allow me to think. Basically, in addition to price being slightly different, I think that MacArthur is very critical in terms of when it comes back. And I think that the bearish case has it coming back sooner, much sooner than it will, and the bullish case has it coming back later than it will. So we'll have to see in it not only what the price will turn out to be, but also how long that will take. And that is probably one of the bigger questions at this point in the cycle that we just don't have an answer to yet. In my view, the Cameco question all comes down to three aspects of psychology, really, or intelligence, or whatever. What do they want? Can they get it? And what do they know, or do they know how to get it? And by this I mean, what price do they want? Do they want the price to stay at $50, or do they want the price to go to 100, or do they want it higher? Also, can they control it? Can they make sure that the price goes to whatever? And then can they make sure it stays there or it doesn't go higher? Because, and along the same track, if they know the price is going to go higher, well, then why are they contracting at the low prices? But if they know that they can cap the price, well, then in theory, they would take the maximum amount that they can get below the cap. So it all comes down to, what will Cameco do? Well, what can they do? And what is best for them? In other words, the three questions: what do they want? Can they get it? And how would they go about doing that? Similarly, if they see the cycle and they see the supply and demand dynamic and they have a view that the price needs to go much higher, and even if they contracted both of their mines, the price would go higher. Well, then why exactly would they want to go about contracting their mines? Why would they go about contracting the production if they knew that the spot price would have to go much higher? I don't know. Obviously, there's something to be said for security, and this is just a random take. I do think they will contract at least a good chunk of their production. But the point is, depending on what they think, where they think the price is going to go, well, why, if they thought that the price would have to go to $70, let's say, well, then why are they contracting in the 40s? If they think the price is going to $100, well, why are they contracting in the 60s? It all depends on what their view of the market is and how strongly they believe that view. And at the same time, if they don't have a strong opinion, well, why are they, if they don't want the price to go higher, if they want to cap it so that there's no new entrants, well, why are they contracting Cigar first? Why don't they just contract MacArthur and try and ebb the price movement? Now, all this talk about what they want, what they know, and what can they get, I just want to point out that they can probably engineer themselves getting a cycle that goes in certain directions, but there's no guarantee that if they do something that the price will spike, and if they do something else, then the price won't spike or whatever. So there's no guarantee, but and I'm sure we all also have a look at the cycle and have some nuanced view on how it goes, what could happen, what would happen. And who knows, someone out there might be right. Probably won't be me. But this is just looking, trying to guess at what might happen. Who knows, a scenario that I haven't seen anyone talk about, maybe because it doesn't make any sense, maybe because it's dumb, but if they didn't want a price to spike, well, since MacArthur is a lower cost mine than Cigar Lake, what if while they were contracting Cigar Lake, they started the restart process at MacArthur River, thereby uh, contracting the higher mine first, hoping or believing that they know what's going on and would be able to contract the next mine in the year or so or more that it would take to ramp up. They could contract that. It's possible, but is it likely? I don't know. Probably not. But the point of much of this, and whether you want to call this bullish or bearish or whatever, is that Cameco should know what's going on. They should have an idea of what the supply and demand dynamic of the sector is, and if they understand everything, they probably should also know that they have a lot of leverage in terms of having a big supply that of in their almost in production asset that could come back online, I mean. And they should also be aware of where their competition stands and their timeline, production costs, and all that stuff. And in theory, having all this information and knowing the depth of the spot market, which again, they in theory should have a decent idea, it in theory would put them in the best place to make the best decision with regards to pricing. Now, if they know, as I've mentioned in prior slides, if they know the price must go to 65 and they believe it can go to, I don't know, let's call it 65 and stay there, but that scenario would only happen if they started contracting and started the startup at 45, well, would they? Doesn't seem to make too much sense. Maybe they'd contract in such a way where their minimum would be 45, but who knows? This is all happening in slow motion. And if they think or they know that there might not be enough ready supply, well, that just might increase, as I mentioned before, the power of their leverage and the negotiating power. So maybe they get a premium because they're ready. Maybe not. Again, slow motion, we'll see. And as I pointed out, we'll see what they do. And I'm sure for all of us, it will feel like like it is happening in slow motion. But remember, it will feel even slower for the fuel buyers who are trying to procure fuel while the price has just moved up and might be continuing to move up, and there could be a delay in restarting MacArthur, or they could be thinking maybe this is going to take 9 months and then it takes 12 and 13, and anything can happen, and we'll see. There's a good chance that it's not the bullish scenario I laid out. It's not the bearish scenario I laid out. It's probably something in the middle. But we just have to keep watching and see if we can figure out what's going to happen and what that means for everything else. Because I don't know about your model. My model or my view is that there might be more than just the return of MacArthur that's needed. But that is for everyone to look at and decide for themselves. Well, that's it for today. I'm sure I've angered a number of people by some of the assumptions that I've made in this video, or some of the things I've said probably are not in accord with some of your views, either one way or the other. That's fine. I'd love to hear what I may be missing or not assuming or being too one thing or the other. Feel free to tell me in the comments. As I have said, I hope to find a way of a proper structure for a few things that I want to mention about some uranium videos. I hope to do that in the next few weeks. I have been, in addition to very busy, very focused on looking at different research and assumptions and figuring things out better. Yep. Hope everyone enjoyed this one, and I will catch you next time.